Hello, everybody. I wanted to come on and talk about Bitcoin at $100,000 because I think this is the mark of a new beginning. It is the era of sovereign money has kicked in. This is a milestone because it is coinciding with a number of different governments, most particularly ours, and up to 11 states, who are all proposing strategic Bitcoin reserves. We have corporations across the country that are beginning to copy MicroStrategy because it is a strategy that can be copied 100%, unlike most other corporations, incidentally. And then just for regular companies to manage their cash better, I believe that it's going to catch on, and many companies will hold reserves in both cash and in Bitcoin. I do believe that Bitcoin is separate from cryptocurrencies. Cryptocurrencies, actually Ethereum and most of the others are competitors to Ethereum, and that is a phenomenal computing system, but it's not going to compete with what Bitcoin is, which is really a store of value that more and more people are believing in. Now, as a percent of the total public, it's not very large. I don't know what the percent is. The estimates range 1-2% to 10, 20, 30%. My suspicion is that Bitcoin ownership is probably high and Bitcoin understanding is probably still pretty low. I make that point because if you look at the number of companies that are beginning to embrace it, and what just happened in our political realm in the last election, it's quite astonishing. And I believe that the percent of people in leadership positions that understand Bitcoin enough to own it is a higher percent than what you would normally find in the public. My main point is that in the House of Representatives, 280 pro-crypto candidates won election. That is a majority of the House of Representatives. Only 122 candidates were expressly anti-crypto. In the Senate, there were 20 pro-crypto against 12 anti-crypto, and the presidency was won by Donald Trump. And he is not only embracing self-custody and ownership rights by the individual for owning Bitcoin and crypto, he also is proposing a strategic Bitcoin reserve, an SBR. In front of whether the US government is going to actually enact that or not, the state of Pennsylvania has already passed through its legislature, and it's waiting for signature by the governor of establishing their own strategic Bitcoin reserve. And there are 10 other states as of yesterday that are moving towards the legislative process of establishing a strategic Bitcoin reserve. Part of the reason we've gotten so many states so quickly is that there is an urgency to get in front of buyers like the United States government, which would be the largest buyer of all time. And Senator Cynthia Lummis from Wyoming has already proposed, has legislation written as of last summer. That is going to call for the US Treasury to own 1 million Bitcoin over 4 years. Now, one of the really important things about all of this is the ownership of Bitcoin is structurally long-term. When buyers come to the Bitcoin market, they're only competing for 35% of total Bitcoin because 65% has been held for more than a year and is generally deemed to be not for sale. That is one of the stark characteristics of Bitcoin that many people do not understand. But the daily volume is $78 billion over the last 60 days, and half of that is buying, half of that is selling. So the demand for new Bitcoin is $38 billion. The number of new Bitcoin is $90 million. That ratio is 422 to 1. That is demand exceeding the newly mined Bitcoin. When states and governments and companies and institutions, who now 1,100 institutions are on record as owning ETFs, and those ETFs were only launched in January. Those institutions have very small positions. There are 1,100 of them. 1,100 is a small number of total institutions. But these institutions are likely to continue to purchase more, and more institutions will purchase. And so you have this demand, the structural demand that is in excess of the number of new Bitcoin, while half of the Bitcoin, 65%, has been held for more than a year. Let's talk a little bit about why a strategic Bitcoin reserve is a good idea and why it actually might solve one of the biggest problems that lead Americans to be pessimistic about the future. And that is the problem of our total fiscal debt of $36 trillion that's growing every 100 days by another $1 trillion, and our structural deficits that are in the $2 trillion range right now. Latest estimates are a little bit lower than that.
This show is being brought to you by our sponsor, Truflation. Professional investors and economists, and probably any casual observers, know that government inflation statistics are only an approximation of what real inflation is. Not only that, but the government has a conflict of interest because high inflation can be so damaging to the economy, the deficit, and our $34 trillion in debt. Truflation collects over 13 million pricing data points. Most are updated daily to reveal inflation with precision for asset managers, governments, companies, and the general public. Check them out at Truflation.com.
Doge represents a phenomenal opportunity to attack this spending that no politician has been willing to talk about for decades and take on successfully, either successfully by getting elected or successfully by actually making inroads into this excessive debt and structural deficits. If the United States were to start building a Bitcoin reserve, there are two ways they could do it, and both of those wind up helping our situation significantly. The Federal Reserve, part of the problem for inflation has been the massive expansion of the Federal Reserve balance sheet from roughly $800 billion before the financial crisis to $8 trillion today. That, if they were to put Bitcoin on their balance sheet, in order to make a dent, they would need to be buying a significant amount. If they bought a significant amount, that would drive demand in excess of supply. And over time, that would increase the Fed's flexibility dramatically by reducing the balance sheet through Bitcoin appreciation. Senator Lummis's bill is proposes that the U.S. Treasury that owns the gold replace the gold and augment the gold with Bitcoin. Same idea there. In order to make an impact on our deficit or our debt, we do need to be building a significant amount of Bitcoin over time. By the fact that any of these large buyers is considering buying alone has driven the price up. The buying hasn't started yet. One of the reasons that we have this structural sovereign debt problem is that in 1971, President Nixon took the United States dollar off of the gold standard. It had been weakened over the years, but we disconnected from gold. And in so doing, all other currencies did as well. This is something that benefits the people in power dramatically because gold imposes a fiscal discipline and a monetary discipline on the US dollar. Sovereign debt in the year 1970 was $1.4 trillion. That is total global sovereign debt in dollars. The total value of gold outstanding at the time was 0.9 compared to the 1.4 trillion. And that is a ratio of 1.56 of debt to gold. Since then, that number has moved up to 6.42% with 99.8 trillion in total sovereign debt as of the end of 2023, compared to 15.5 trillion of gold above ground. So 6.42. That extraordinary expansion of credit and debt was caused by the lack of discipline of connecting to gold. So introducing Bitcoin, which is a rapidly appreciating asset, would significantly improve our ability to pay down the debt that's outstanding. Let's talk about Bitcoin's core value proposition. There are really, I think, of three main areas. The one is asset protection. You can place your assets in Bitcoin, and Bitcoin operates completely unrelated to the rest of the financial markets. And it has served and should serve as a hedge against currency debasement, because the 21 million total Bitcoin can never be changed. It's not controlled by anybody or anything. It's decentralized and operates outside that control. And so its supply can never be a function of increased demand. More and more people appreciate this. This is why more and more people have moved to Bitcoin, to owning Bitcoin. And in that sense, it does serve as a hedge against currency debasement. Second is financial freedom. There are plenty of areas around the world where individuals are not able to participate in the monetary system. Take Afghanistan, for example, where women are not allowed to participate in the financial system. The Human Rights Foundation uses as a great example an organization started by a woman with many women employees, that she was not able to meet the payroll because the banks cut her off. And by using Bitcoin, she was able to continue the company beyond that. And in all regimes around the world run by authoritarians, the banking system is a tool that they use routinely to fight against dissidents. And the third area is actually ironic because most people think it is an energy user, but the reality is that Bitcoin mining is an energy efficiency tool. And that's because Bitcoin miners are unprofitable if they operate their mining at current electricity rates. And so they need to always find excess or stranded electricity in order to compete and stay alive. And by doing that, they actually take the infrastructure that is generating electricity and wasting it and making that infrastructure more efficient. Let's take the example of a wellhead where natural gas gets flared routinely. Rather than flaring it, natural gas companies are able to put Bitcoin mining at the wellhead and participate in the Bitcoin network through mining and convert that wasted electricity into dollars. This is happening all over the world, often in very poor areas of Africa and elsewhere, where excess energy is a big problem. And that excess energy can be turned into cash, which reduces the overhead costs of the production facility. This is a tremendous and underappreciated use case for Bitcoin. One of the really interesting things about Bitcoin is that since 99.98% of Bitcoin is secondary transactions, meaning it is it's the demand every day that is in excess of the Bitcoin miners, since almost 100% of that is secondary, that means that the buyer's cash goes to seller as cash, and the cash in the overall system does not get affected. So Bitcoin has a net neutral impact on economic activity. Looking forward, I think about this $100,000 milestone as really a catalyst for a broader understanding and a broader adoption of Bitcoin throughout the world. As more individuals and institutions and governments all begin to inch their way into owning Bitcoin, the supply is not going to change. Since there's a majority in Congress right now of pro-crypto politicians, the chances are quite good that we will get some sort of a Bitcoin purchase by our government. The chances are much better that we're going to get Bitcoin purchases by states in the United States, and it's even higher that we're going to get corporate buying, and it's even higher that we're going to get institutional buying, and it's even higher that we're going to get individual buying. And so if you haven't taken the time to look at Bitcoin, you really should. The more you dig into it, the more likely it is that you're going to understand it and appreciate it, though that is not necessary to participate in what should be a very bright future ahead for this very volatile first-time invention of man that separates money from state to appreciate from here. Thanks a lot. See you next time.